The global economy is facing headwinds at the outset of 2019. We have seen in particular quite a slowdown in the Eurozone, and the UK economy is obviously facing severe challenges relating to Brexit. But the US economy is moderating in a more manageable way. We still see quite good growth prospects for the US economy over the year ahead, although the manufacturing sector has shown some signs of easing in momentum. In that context, the Asia-Pacific economic outlook still looks quite resilient, although there are headwinds coming from the US-China trade war, a slowdown in the global electronics cycle, which is hitting some of the big exporters of electronics in the East Asian region, and some moderation in regional trade flows that has been evident over the past 6 months. Despite these headwinds, the overall outlook is for the Asia-Pacific region to perform quite strongly this year, growing at around about a 4.7 pace this year, which is only a touch lower than the growth momentum last year. We are seeing some signs of weakness in the Japanese economy, but the Chinese economy is still holding up quite well, despite the impact of the US-China trade war. We have seen signs of a significant slowdown in the export sector in China as a result of the US-China trade war, particularly since July last year, when the US started putting in quite significant tariffs on certain Chinese imports. Export orders from China have fallen quite significantly, so we are seeing an impact on the manufacturing sector that has intensified over the last 9 months or so. But the Chinese government has taken a number of measures to stimulate the economy, including fiscal stimulus measures, boosting infrastructure, cutting some taxes, and also on the monetary policy side, we have seen action by the PBOC to ease monetary policy, particularly through cutting the reserve requirement ratio a number of times. So these are helping to support the growth outlook in China. Overall, we expect Chinese economic growth to be pretty strong this year at a pace of 6.3%. That's only a touch lower than last year's growth rate of 6.6%. Despite the relatively favorable outlook for the Chinese economy this year, and we also expect that next year China can grow at a pace of around about 6%, there are downside risks to the outlook. And the risk of a hard landing, which we describe as growth falling down to around 4% or so, is still a risk that corporates should take into account when they're doing their stress testing for the global economic outlook and also for the outlook for the Asia-Pacific region. And the concerns around a potential hard landing in China over the next couple of years or so are particularly related to some of the imbalances that we see in the financial sector, high levels of non-performing loans in the commercial banking sector in China, as well as relatively high bad debts in the shadow banking sector. The non-banks are sources of concern. In addition to that, corporate debt levels have risen very rapidly in China since the global financial crisis. So all of these stresses within the financial sector remain a key cause of concern, and it's also a high priority for the Chinese government, who have been trying to deleverage some of these high levels of debt. But overall, the probability of such a hard landing is still relatively low in our opinion. Over the next 2 or 3 years, the risk is in the order of perhaps around 20%. Our global model of the world economy is our key tool that we use to look at the outlook over the decade ahead and beyond. And our projections over the next decade are that the Asia-Pacific region is going to be the key growth engine for global economic growth. About 50% of the total increase in world GDP is expected to come from the Asia-Pacific region. And the most important growth driver for that growth is still going to be China. We think that China will contribute around 28% of the total increase in world GDP in the decade ahead. But India is also becoming more important. We see India as becoming a key player in terms of the global economic growth outlook, contributing around 11% of the total increase in world GDP over the decade ahead. And the third growth engine that's driving the Asia-Pacific is the Southeast Asia region, the ASEAN region, and the combination of China, India, and Southeast Asia are the three growth engines that are powering the Asia-Pacific economy and making it the most important growth engine for the world economy for the foreseeable future.